Hi guys. Am I audible?
Yes, sir.
Second. Okay. Am I audible? Can you all see me? A
Yes,
little
sir.
heads up on that,
Yes, sir.
guys.
Yes, sir.
Perfect. All right. I assume a few of you guys have your first lecture of CFA level 1 today. And a few of you guys, I think, have done a few subjects as far as I remember. Is that kind of mix we are looking at in the class? Okay, perfect. So let me just quickly introduce myself. I see another Shreyash in the class. That's nice. Okay. So hi guys, I'm Shreyash. I have cleared my CFA level 3 back in 2019. Now I'm doing CA. It's a long story. Why am I doing CA now? I have just given my CA final. I'm waiting for the results. But right now I started my CA post my CFA. There's a long story to it. My father already has a practice, so I thought might as well, if you want to stay back in India, do that. But teaching is something which I really like, and I've been doing that for a while now. I really enjoy doing that, interacting with students, trying to make sure that I make concept easy for you guys. So yeah, that's about me. I have worked in a few family offices, and I have done equity research there, and also a few transaction advisory work. So that's about me. Let's get started with the subject head on. A little bit about subject. We'll first start with that, and then we'll try to understand what is the weightage like, what is the exam implication, and all of those things. We'll understand that. But I assume you guys are aware that we're going to do equity today. So I hope I am assuming that everybody is okay with English here, or if you want me to do, I'll do a bit mix of Hindi and English. So if that's okay, I'll also do that. That's not an issue for me. So if there's just let me know about the language comfort as well, so that we can uh, establish a good wavelength. Also, one more thing, a few rules about the class. Perfect. Done. All right. A few rules about the class. You guys can raise your hand. You guys can start talking whenever you want. Just unmute and start talking. It's fine by me. But I would really appreciate that if I finish the concept, and if you guys can, probably raise your doubts or whatever you want to add, I'll really appreciate that. One more thing, we'll try to keep it two ways. We'll try to make sure that we have a discussion. I ask a lot of questions to you guys. Of course, for the topics which you guys are not aware about, we can't do anything. But today, what we're going to do is very basic. And you guys might have heard a lot of things about whatever we are going to do today, at least today. So we'll try to make sure that we keep the class as interactive as we can. Unmute whenever you want. Try to ask the doubts. If you want any additions, if you have any additions, try to do that. It's fine by me. No, not an issue. Let's try to keep the class a little bit more interactive. That's it. That is all I have. I don't have a long list of ground rules. Don't worry about that. So let's get started. What are we going to do? We are going to do, of course, your equity, uh, which is your. We're going to start with equity, and we're going to start with reading number 39. But a little bit about the subject. What exactly are we going to learn in equity? So equity as a subject is very introductory for you guys from a level 1 standpoint. In level 1, it will tell you that what exactly are different types of equities, what are the different types of securities available in the market, what are the different contracts that you enter into the market. For example, a forward contract, future contract. If you guys have not heard about it, we'll try to discuss it today. Then we are going to understand that how do you exactly value the equity? How do you value a particular company, but at a very nuanced, at a very basic stage here. In level 2, you will understand the valuation very well, but here you will have a very basic introduction to valuation, that what are the different models that you use for valuing a particular company. Let's say, for example, if you guys have heard, what exactly do you mean by PE ratio, which is a price of a particular company divided by earnings per share of a particular company. Let's say, for example, the P to E ratio of my company is 5 times. A competitor company is having a valuation of 10 times, sorry, let's just put it this way. A competitor company has a price of rupees 400, and their P to E ratio is 1. That means for every 1 rupee or for every 1 P to E ratio or PE ratio, they are quoting a price of rupees 400. So if we compare that, what can our price be? It'll simply be 5 times whatever you get, 400. That'll be our price. As simple as that. So these are the kind of tools that you're going to learn. That some competitor company has this particular PE ratio or has a particular ratio. How do I value myself? How do I value myself on the basis of the metrics that I have? on the earnings that I have, on the projections of earnings that I will have in the future, on the kind of growth that I anticipate for my company. All of these different models we'll try to use and we'll try to value the company. We will also understand that when you see the index, we see Sensex, we see Nifty. How exactly is Nifty price? Okay, I'll go a bit slow. This is just an introductory part, Dave. Don't worry. How is Nifty priced? How exactly are all the stocks? We have heard Nifty 50. There are 50 stocks in Nifty. But how exactly is Nifty priced? When you say Nifty 50 is, let's say, currently trading at 20,000 rupees, what do you mean by that? That means all 50 stocks, when you add the price, that means it comes to 20,000 rupees. Is that how you value Nifty? The answer is yes or no. We'll understand that in the relevant chapter. But I hope I've raised that curiosity with you guys that how exactly is Nifty valued? How are the stocks included in Nifty or Sensex? You guys must have heard about these different indexes. This is another chapter that we are going to do. So this is what you're going to learn in equity, where you're going to understand what exactly are equity shares, what exactly is the equity market, what exactly is the overall security market, what are the different things that that are offered there, how do you value the equity, how exactly a particular Sensex, Nifty, all of those things are mattered or calculated. Uh, you know, basically how the value is calculated. And then also you're going to understand that, let's say, for example, I want to value a particular industry. Let's say, for example, I want to value pharma industry. Let's say, for example, I want to value automobile industry. So how do I understand that industry? What models do I apply to understand that industry? What is the competitive landscape of that industry? Let's say, for example, currently you guys must have been, I'm sure you guys would be aware that in automobile industry, let's say, for example, it is slowly moving towards EV, right? But it is also slowly moving towards different form of fuels. Let's say, for example, can you guys give me some examples that what is happening, what is currently happening in automobile industry? What are the different forms of fuel that not a lot of
Hydrogen,
calculations. CNG is already existing. What else?
hydrogen,
Absolutely, absolutely spot on. Absolutely. Ethanol, which is going to be made up of different types of, let's say, for example, sugarcane or wheat. Brazil used to do this long back in the 90s. But then, if you guys are aware, there is an organization called OPEC, which controls the oil supply and oil prices in the world. So there was some issue, and then all of those things happened. It's a very interesting case study. If you guys want to read, definitely you should. Yes, corn, anything, any sort of agricultural produce. Then I also heard somebody say hydrogen fuel. For some reason, pen is not working today. Second, guys. Let me check what is the issue. Guys, just give me a second. I'll just see what's the issue with the pen today. Sorry for this, guys. Anyway, so coming back to what we were discussing. Yeah. So there are other options which is called as, let's say, for example, hydrogen fuel. Sorry, there's a spelling error here. Yeah. So there's hydrogen fuel. Then there is, of course, there are a few more examples. There are biofuel. So all of these things are happening in that particular industry. So how exactly all of these things are going to impact that industry? Because why is that relevant for me? Because let's say, for example, Maruti Suzuki, I want to value that company. I want to value the stock of that company. So for that, I want to understand the industry landscape, because the industry landscape will influence my earnings. जो industry में हो रहा है वही तो मेरी earnings influence करेगा ना. So I want to understand that. So there is another chapter for this. How do you understand this? Then there is another chapter about how do you understand what are the contents of a research report. When you go and read a research report about a particular stock, let's say, for example, I want to read a research report about Tata Motors. So what are the contents of that research report? How exactly the different metrics are added in that? All of those things. Another very interesting reading. So this is equity as a subject is very, you guys, as I'm sure a lot of you guys would have registered for CFA because of your passion for markets somewhere. Somehow, you would be a little bit, excited. You would get excited about, let's say, stocks or something like that. So these are the things which you would have heard somewhere here and there if you guys are market enthusiasts. It's just that we are going to try to structure this today or in whatever lectures that we are going to have. So that was a brief introduction about equity. From an exam standpoint, a very, very important subject because it carries a weight of 11 to 14%. 11 to 14% is a lot of. How many questions you guys have? You guys have somewhere around 180 questions for your exam. That is almost good at the minimum 20 questions in your exam. So this can make or break your exam. So you have to make sure that you have to do this subject pretty well because this subject is pretty easy. Very, very easy subject. The readings would seem a lot, that there are 7 or 8 or 9 readings as far as I'm not exactly sure about the number. But whatever the number of readings are, don't get intimidated by that. A very, very simple subject. Trust me. You will be able to score very well in this. If you practice well, if you're reading things very well, you will be able to score in this exam. And this can make your exam very well. Because usually I have seen that people are very comfortable with equity. People are not very comfortable with fixed income because that is very unheard of in India. But a very, very scoring subject. And 11 to 14% of your exam. I will take a different exam strategy video where I will try to guide you guys कि कौन से subjects करने, what subjects to do, what order to do, how do you approach that, what kind of weightages are there, then how do you approach a particular weighted subject, how to tackle ethics. Let's say, for example, you should do ethics every day because I did that. I did 10-15 questions in my prep or 2 months of prep, 1.5 months of prep. I used to do 10-15 questions every day because ethics you cannot do at in one go because you'll keep forgetting. It's a constant practice that will require. So we will have these exam strategies somewhere else. I mean, some other time when once we are done with the subject, when you have a good hold. But right now, what is relevant for you guys is this is 11 to 14% of your exam. Right. So let's start with our first reading, guys. Any doubts so far? Is the speed comfortable? People who had issue that I want to, you have to go a little bit slow. Is everything okay? Should I go ahead? Yes, there are a bit sums. There are a bit of perfect. I'll do that. Nishi feedback taken 100%. All right. ठीक है. Chalo. Let's go ahead now. Let's start with our reading number 39, which is market organization and structure. So as the name suggests, a very basic reading, and I would not lie to you guys, a bit theoretical. So thoda boring hoga. This will be because this is an introductory reading. It will introduce you to everything. Whatever you are going to learn today in this particular reading, you will learn in other subjects. Let's say, for example, today we're going to talk about futures contract, forward contract. These are derivative contract, and this has a different or a separate subject. We are going to understand that in greater detail. For people who have already done it, great. For people who have not, just a heads up that whatever we are going to discuss today is going to be in brief. Because imagine you're going to learn each and every contract, each and every detail each and every topic in greater detail in that subject. So right now, today, we are going to have a very brief discussion. We are going to touch upon the topics. Wherever I feel that I should go a little bit depth, I will. But ऐसा होगा आज that you will be a little uncomfortable with, अरे what is futures, what is forward, अरे what is swap, अरे यहाँ पे because here there are only the reading is very brief. It introduces you guys. So take it as it is. Then when you go to the subject, that particular subject, let's say for example, you're going to learn today asset-backed securities. It's a topic which is going to be discussed in much greater detail in fixed income, which is the subject which you guys have. Point being that today you have to swallow the bitter pill and you have to make sure that you are attentive and you understand the facts that I state for you guys. And we'll try to make it interesting. But we cannot grow in greater detail because of the constraint of the subject. But having said that, you will learn these things in greater detail in your relevant subject. And I will tell you where you're going to learn this, right? Let's get started then. I know. That happens. Can't help it. Generally, also, attention span, all of us have drastically reduced. I'm sure everybody would agree. Our attention spans have reduced because of, let's say, reels and shorts and everything else. So our attention span, everybody's attention span has reduced drastically. So it goes with everyone. I think I cannot focus for more than it takes 15-20 minutes. I have to have a conversation. I feel a bit fidgety. कि यार नहीं कुछ करना है यार बात कर लेते हैं कुछ कर लेते हैं तो थोड़ा सा अच्छा लगेगा अच्छा नहीं तो 15-20 मिनट्स हो गए हैं तो कुछ बात करते हैं ठीक है ओके आई एम वेयर आर यू गाइस फ्रॉम सो आई एम फ्रॉम मुंबई आई एम फ्रॉम दिस प्लेस कॉल्ड Malegaon near Nasik, but I stay in Mumbai. Where are you guys from? Oh, Pune. Lovely place. I love Pune. Ahmedabad, Gurgaon, Pune. A lot of people from Pune. Oh, Ludhiana, nice. यार मेरा पूरा फैमिली टेक्सटाइल में है, तो लुधियाना काफी लोग आ जाते हैं. तो राजकोट नाइस. नवी मुंबई. नासिक, अरे नासिक क्या बात है, हाई फाई. कौन है नासिक से? परफेक्ट. देयर आर पीपल फ्रॉम नासिक, नवी मुंबई, मुंबई, बैंगलोर. क्या बात है. सो वी हैव पीपल फ्रॉम, आई थिंक, द एंटायर कंट्री ऑलमोस्ट. नाइस. आई लव द fact that there are people from a lot of cities here. Okay, so Surat, अरे क्या बात है, खमनी. Nice. Half of my family stays in Surat. I love Khamni. Madini Khamni, best hai. I also love Safed Khaman or Rosa. I'm a great food enthusiast, guys. I love food. So I would love to have a conversation over food. Delhi food, amazing. Love the chart from Delhi. Anyway, so let's get back to the topic again now. Uh, okay, so let's get started and let's understand what are the functions of financial system. What is financial system? Let us first understand that. In our country, what is financial system? What includes the financial system? Stock markets, SEBI, RBI, all of these banks, all of these people together create a financial system for us where we can borrow money, where we can invest money, where companies can borrow money, companies can invest money, where there are different financial tools for you to be able to invest. There are shares, there are stocks, there are shares, there are bonds, there are derivative contracts, there are multiple, there is also real estate where you can invest in. So financial system is the backbone of a country, right? What do you guys think are the ideal features of a financial system? How should a financial system be, according to you guys? What are the features of a financial system? I'll just remove the slide so that you guys can answer. What do you guys think? What are the ideal features of a financial system?
There should be a regulatory body.
So it should be regulated, structured. Okay, I'm getting those answers. Transparency, fair, credibility, organized body. ठीक है, ये सारे regulator में डाल देते हैं हम लोग. All of these points are regulator points. Liquidity, okay, perfect. What else? Return, interesting. ठीक है. What else? Control and manage risk, allocation of capital. Okay, perfect. To make sure people are not getting scammed. Very, very important. Standardized, perfect. Implementing government. Okay, so mota you guys are going towards regulator only, which is expected of you guys. Okay. Let's see what is on the slide. First things first, a financial system, can I say, should enable, should facilitate companies or individuals to save money and to borrow money. Tomorrow, I have savings. I'm earning income from my job. I'm earning income from my business. But tomorrow, there is no bank. There is no stock market. Where will I put that money? I'll keep it idle. Na? Imagine the countries that are very poor, who have survival as an issue. Imagine they don't have that, their stock markets are not that evolved. Their banking systems are not that, they're not that great because survival is that issue. Probably a country where civil war probably has, a country that is going through a civil war. What do you guys think? There are adequate system of financial system there? No. People are not able to save people are not able to invest their money. The money that they're probably saving. Possibly they're not saving any money, but if at all they are saving, there is no bank for them to be able to invest. There is no organized stock market for them to be able to invest, right? Point being, a financial system should have institutions in place, should have securities in place, should have different systems in place. I'm just repeating the word, but the point being that it should enable for you guys to be able to save the money and to be able to invest that particular money that you have saved. कल को अगर स्टॉक मार्केट नहीं है, कल को अगर there is no FD, there is nothing, where will I put my money? It'll just be lying idle, right? So it should allow the entities and also the individuals to save and borrow the money. Now I was able to save the money and put that money somewhere else. But can I say, as a bank, when I take money from people in the form of fixed deposits, the money that people invest with me, what do I do with that money? I lend it further, na? What is the business model of bank? What does a bank do? Bank collects money from people, let's say for example in the form of FD, then whatever money it gets, it is going to use that money to lend further. The rates that it offers at FD for FD is let's say 6%, and the money that it or the rate that it charges for lending is let's just say 8%. So what is the spread of the bank? How much is the bank earning? Sir, simple 2% profit margin. Whatever bank is collecting from investors, it is giving 6% on that money. Whatever is bank lending to the people, to the borrowers, bank is charging 8% on that. So whatever is the differential amount is the bank's income. So banks should be structured in such a manner that it allows people to be able to borrow money as well. Tomorrow, if I want to expand, tomorrow, if I want to do my business, will I have all the capital? No, I have to go to the bank, borrow the money, open a new plant, start a new manufacturing, all of those things. So I should be able to save and borrow money. That is the most important thing. It should allow the entities to raise equity capital. Swiggy, guys, what did Swiggy do? Swiggy was able to raise money, right? Not raise money, it gave an exit. It was an exit. But anyway, let's just assume for simplicity. When companies come up with their IPOs, what do? They raise money from people. Agar tomorrow, if there was no SEBI, tomorrow if there was no BSC, tomorrow if there was no NSC, would the company have been able to raise equity capital from public at large? Would the company go and reach out to every individual? Are you going to invest with me? Are you going to invest with me? Are you going to invest with me? Imagine how tedious that would be. Imagine, think about these things. And this 70, 80 years ago when these things were not evolved, this was a challenge. So it is so easy for people to raise money through equity capital. There are multiple big banks who help you out. They'll come as as a mediator, as an investment banker, and they'll do all of those things for you. We'll discuss this in detail. So it should allow you to raise equity capital. It should allow you to manage your risk. Now hold this point for some time, and I'll discuss this point in greater detail right here when we talk about risk management. So hold this point for some time. Trade assets currently or in the future. It should allow you to trade the assets. What is my asset? Let's say, for example, stock is my asset. The shares that I have is an asset. I want money from that. I want to sell that. My financial system should allow me to sell that. It should give me a platform. BSC is that platform. NSC is that platform. Today or in the future. Now, why do I say today? So I get it. Currently, I get it. Currently, the sir is clear. Today, I want to sell my stock. I'll go on BSC and I'll plug in a sell order and my stock will be sold. But what do you mean by future, sir? Hold this again for some time. We will discuss this future part right here in derivative contract. Yeah, we'll discuss that part in derivative contract. And trade the assets based on their estimates of assets value. Now, what does this mean? For this, I have to discuss a definition of liquidity. Can somebody tell me, sir, what do you mean by liquidity? What is liquidity, guys, according to you guys? What is liquidity?
How fast we can convert an asset into cash at its fair value.
Absolutely spot on. How fast you can convert your asset at its fair value. So ability to trade asset, please ignore my handwriting, at fair value within reasonable time. I'll just write reasonable here. That is all that's this kind of space that I have. Let's compare two assets. First things first, let us compare real estate. I have a piece of flat, or let's say not a piece of flat, I have a flat. Okay. I want to sell this flat. Can I say I'll have to hire brokers? I'll have to list my flat at multiple, selling avenues. I'll have to hire brokers. People will come and see my flat. Some people will like the flat. Some people will not like the flat because it is a customized place. I would have added my own furniture. I would have added I would have had my own view. I would have had my locality, whatever it is. People will come. Some people will like it. Some people will not like it. The ticket size is huge. What do I mean by ticket size? Sir, the flat would be for 2 crores. So for somebody to have 2 crores, for me to be able to sell for 2 crores, that is also difficult. That is a problem again. I'll have to hire brokers. It's a time consuming process. For somebody to like my flat, to buy the flat at the value that I want, all of these factors to go right is difficult. Why? Because it is a highly customized asset. It is a high ticket size asset. For somebody, then they will negotiate. Sir, I don't have 2 crores. I cannot pay you 2 crores for the next 1 year. I don't have that much. I'll say, Abhi kitna hai bhai, utna de de. How much do you have right now? Acha, in the next 1 month, I want money, sir. I only have 1 crore 80 lakhs. So let's just cross lock in 180 crore, 1 crore 80 lakhs. Was I able to sell the asset for 2 crores, which is the fair value of that asset, the market price of that asset, the price that would that a willing buyer and a willing seller would be able to trade? No, sir. We had to settle for a discount to the fair value because we needed money urgently. We had to settle for that. So can I say real estate market is not very liquid, sir? But when I come to stock market, when I come to share market, stock of a company, HDFC Bank's stock, the stock that you have, the stock that I have, the stock that somebody else has, that stock is the same. It's not like real estate. The flat that you have, the flat that I have, the flat that somebody else has is different. It's not the same. It's not the case with HDFC Bank's stock. It's the same asset. There is a platform for it, which is BSC or NSC, which is where there are a lot of participants involved. For me to be able to sell my flat, I had to find brokers. For people had to come and visit. Here there are thousands, probably lakhs of people on the same platform who are willing to buy instantly. And because of this, I'm able to achieve liquidity because I will be able to sell that asset at its fair value. Because the asset is homogeneous. The platform is huge. There are a lot of people there involved. There are a lot of people on that particular platform. So I most likely will be able to sell that particular stock at its fair value on the BSE as an exchange. That is what liquidity is. How fast am I able to convert my asset into its fair value within reasonable period of time? What is fair value? The price that particular asset should have. It should be, let's say, for example, I'm talking about a piece of gold, which is 10 grams worth of gold. It is a very liquid asset. I can probably go to quickly and, go to a jeweler's shop, whatever 1-2% of discount which he will ask, and get it converted into cash pretty quickly. Same goes for stock because it is very homogeneous. Right. So a financial system should enable for you to sell your asset at its fair value within a reasonable period of time. Does that mean that financial system should promote liquidity? A financial system should be liquid, right? It should be very liquid. Because if it is not liquid, I will have to sell my asset at a discount to the fair value. The value that it should ideally be selling at. It should have been sold at 2 crore rupees, but because it is a piece of real estate and the ticket size is huge, I'm not able to get that 2 crore rupees that I wished I wanted. Basically, I wanted. That's why I'll have to give a certain discount. No, you never do that, Mayuresh. What you do is essentially there's a gray market for it where you just try to find out what the value is. So you never do that. You never sell that. You have to, na, initially, Karan, when the market is evolving, imagine करो, आप आज real estate में ऐसा कोई platform नहीं है where there are, where buyers and sellers come on a huge extent. But if I have that particular asset which I have invested in, I'll have to sell it, ना. मेरे पास पैसे की जरूरत है, I have to do that. And people do invest in real estate. Why is that so? Because it is a good diversification. I don't want to put all my money in stock market. It is risky. Tomorrow, if stock market collapse, what will I do? I want to achieve diversification. I don't put all my eggs in one basket. That's why I'll have to invest in securities that are not very liquid. And there is good return as well. That obviously goes without saying. So a financial system should be liquid. It should enable me to trade the asset based on their estimate of asset values, basically talking about fair values. Now, what is fair value? Basically market value. Ideally, what should be the market price of this particular asset? That is what fair value is. You will understand this in greater detail in FSA. But for now, what is enough for you guys is what exactly it should be priced at according to given market conditions. Determine the returns, that is interest rate, that equates the total supply of savings with the total demand for borrowing. अब ये थोड़ा सा confusing हो जाएगा. What is this? Let us just read this line, particular line, in greater detail. Okay. Let us first understand, and we have understood this part. Let me just erase the full thing. Okay. So we have understood this. यार क्या पेन करूं? I don't know what is the issue today with the pen. Okay. So we have understood what exactly is the business model of bank. Bank collects money from people in the form of, let's say, FD, and then eventually lends money to people in the form of what? Loans. There are different type of loans, sir. There is home loans, there is property loan, there are multiple different types of loans. You know, property, basically commercial property loans, again, commercial property, LAP and everything else. There are a lot of different type of loans that are there. Right. Now, what happens when, now let's say, for example, the FDs that bank is getting, are a lot. A lot of people are coming and investing money with the bank. That means bank has a lot of capital to lend. Bank has a lot of capital to be able to give out loans. But there is not a lot of demand of the loans. There is no demand for loans. There is no demand for, or एक second. Let me just, ये थोड़ा confuse हो जाएगा. This can be a little bit confusing. So let's just try to understand this the other way around. It'll be much better. Okay. What happens when the interest rate goes down? What happens when the interest rate goes down? Tomorrow, RBI comes out with an announcement that we are trying to cut down interest rate by, let's say, 15 basis point. Matlab, basically, let's just say 0.5%. Tomorrow, if the interest rate falls by 0.5%, what will happen? What are the implications of this from an economic standpoint? Loan demand increases, absolutely spot on. Loan demand will increase. What happens? When the interest rate goes down, more and more people will consume. A very classic example is automobile loans. If the automobile loan, if the interest rate, currently the interest rate in the market goes down, what will happen? More and more people will buy or borrow. More and more people will borrow automobile loans and will buy cars. Why? Because the loans are cheaper right now. They have an aspiration to buy a car. The loans are cheaper. Let's just borrow and buy the car now. It makes more sense. So when the interest rate goes down, what happens? When the interest rate goes down, demand for loan increases. More and more people want to borrow because the interest rates are cheaper. I have always dreamt of owning a house. I always wanted a house. So now the interest rates are down. Let's just take a home loan and buy a house. So what happens when the interest rate goes down? The demand for loan increases. The demand for loan increases. Right. Now, as an investor who is investing in the FD, who's investing in FD or different bank instruments or different type of instruments, can I say for me as an investor, investing right now is not very attractive. Kyun? The interest rates are down now. Why would I invest right now? Investing right now is not very attractive for me because the interest rates are very less. What will I earn from that? If the interest rates were high, I would have invested. Right now, it is not very attractive for me. So what happens when the interest rate goes down? People invest, the people who are going to invest, that investment becomes less. Basically, the supply of investment. If the interest rate goes down, the supply of investment goes down, but the demand for loans goes up. Right? Now, what happens as more and more people would want to borrow? As a bank, now I have a sudden demand. Everybody is coming to me for inquiries of automobile loans. But as a bank, I can only lend to certain amount of people. So what will happen? We have studied in economics. As demand for something start going up, the prices also of that particular, whatever that commodity is or whatever that good is, that also goes up. So what will happen slowly? Sir, as the interest rate, as RBI has reduced the interest rate, the demand for loan will go up. And as the demand for loan goes up, slowly, the interest rate will start to increase because bank will have a lot of inquiries and bank would want to lend to people who, bank would want to earn more profits. So it will try to increase the interest rate slowly. So prices will go up. Can I say there is a problem here? There is a fundamental problem here. Sir, what is the problem? The problem is that the demand for loans is much higher as opposed to the people who are investing in the system. Are how does bank give out the loans? Bank give out the loans from the money people invest with them. अब investment ही नहीं हो रहा है तो loan कहां से दूंगा मैं? When the investments are not happening, where will I give out the loans from? That is the fundamental issue. And your financial system should address this issue by equating the number of or the amount of investment that is coming with the amount of borrowings that is happening, which never happens. But we are right now talking in an idealistic scenario. Sir, what if there's, you would have heard in economics, if there was a rational investor, who's rational? So many economic theories are based on rationality only, right? This happens, and this is a loop. You're right, absolutely right, Devangi. This is a loop. This is a loop. And you would have, and mind you, now start reading newspapers very carefully. Whenever an RBI meeting happens, and RBI, let's say, for example, cuts down the interest rate, read newspapers very carefully. You will find out that banks have not been able to pass on that benefit to its customers. What do you mean by passing on the benefit? RBI has reduced their interest rate, so bank should also reduce the interest rate. But ideally, bank is not able to fully reduce the interest rate because of this mismatch. And you will read this a lot. In newspaper, you will read this in the next 7-8 days of RBI meeting. You will start reading. Banks have not reduced the interest rate. Banks are not passing on the benefit. Then RBI comes up with a circular. RBI instructs the bank that we want demand to increase in that particular area. Listen, we want demand. You cut down your interest rates. And then all of these things happen. My point being, we should not get in a lot of detail here. Yes, bank deposits are at low levels. वो कब होगा? वो SLR और CRR की बात कर रहे हो तुम लोग? What you're talking about, Ronak, is SLR and CRR. I'm talking about the interest rates. There's a difference. And you will study this in economics. Okay. So point being, a financial system should have such, it should be that efficient that it should equate the amount of investments that are coming with the amount of borrowings so that the interest rates are at an equilibrium level. What is equilibrium level, sir? The amount of people who are investing, the amount that is being invested is equivalent to the amount that is being lent out. So when they both are equal, your interest rate will be equilibrium. इसका मतलब क्या हुआ? Banks are having exactly that amount of money what people want to borrow, and it is a very idealistic scenario, right? So what do I mean by that? Sir, demand is equal to supply, as simple as that, which Ruchika has absolutely fairly pointed out, where demand is equal to supply, right? That can never happen. But idealistically, a function of financial system, we are trying to learn and we are trying to understand that, sir, what are the good features of financial system? So it should be able to do that, as simple as that, right? And this can be a little bit problematic for you guys to be able to understand. But if you guys are done with economics, it will be a cakewalk, right? You guys have to understand the metrics of bank, what happens with the bank, what is CRR, what is SLR, what is repo rate, what happens. You guys will not understand fully this year in your CFA level 1 because thoda US point of view se hai, but still you will understand what exactly Fed does and all of those things. You will understand that. So again, it should be that you will understand that very well in economics. To swallow it with a bitter pill a little here, right? The next is allocate the capital to its most efficient use. That makes sense, no? a financial system should provide different types of securities for me so that I can allocate my capital to the most efficient use. What does that mean? Sir, for simplicity, let us assume that tomorrow there is no stock market. There is only instrument where I can invest is the bank FD or saving bank, that is the saving bank deposit that I have with the bank. What are the interest rate that is FD offering these days, guys? What is the interest rate FD is offering these days? 6%, 7%, 6.5%, 7.5%. 7.5 थोड़ा ज़्यादा हो गया guys. But yeah, 7. 6 to 7 is the ideal range. Can I say, am I able to utilize my capital to the most efficient use? If I put my money in stock market, I can earn anywhere between 10 to 12%. If there was no stock market, if there was no BSC, if there was no NSC, I would have still been earning 6 to 7% on my capital, which is almost as good as inflation. Probably less than inflation. And what exactly, can somebody tell me what exactly happens when let's say for example, inflation is 5%. I have invested rupees 100 today and bank FD is offering me 4%. What is the problem here?
We are
What
not
is the
beating
problem?
inflation.
You are not beating inflation. Okay. तो इसका problem क्या है? You are not beating inflation. But what is the underlying issue here?
The real rate would be less than the rate offered by the bank. No.
Our money is
Okay.
decaying.
Money is decaying.
Negative, we are
Absolutely.
negative
Absolutely.
returns.
Okay. Something that was selling at T equal to 0 for 100 rupees, after 1 year, the inflation is 5%. How much is it going to sell for? Sir, 105. I have today invested, sir, 100 rupees. That becomes 104. Will I be able to buy this thing which is selling at 105? No, sir. My money has decayed. That is the issue with this. So tomorrow, if there was no stock market, there was no bond market, there were no different instruments for me to be able to invest, which is alternative. Let's say, for example, hedge fund, commodities, we will have a discussion on that. I would have only had FD or savings deposit to be able to invest in. And that's not a good proposition for me. I would barely be able to beat inflation. That's not a good return. Right? In the long run, my money will suffer. That is what the issue is. So a financial system should be able to allocate the capital to its most efficient use. And in order to fulfill these roles, what are the features that it should have? Sir, it should be liquid. We have discussed liquidity in greater detail. A financial system should be liquid. It should provide you the platform to be able to sell your asset at its fair value within a reasonable period of time. If you are not able to do that, there is an issue with your financial system. And that is what this is trying to point out. There should be lower transaction cost. Sir, what is transaction cost? Can somebody tell me what transaction cost is?
Cost associated with the buying and selling of assets.
Absolutely true. Can you give me an example?
Like when we sell a share, we have to pay a commission to the broker.
Absolutely. The brokerage? Okay. Guys, what happened 10 years ago? And a very classic example of this I always give in every class. What happened 10 years ago where a company which revolutionized broking completely. Zerodha entered the market. And what did it do? How Zerodha differentiated itself and is doing very well today. What happened? What did it do, guys?
So basically, it started with the scheme, which is 20 rupees per transaction.
Okay. Do you mean 20 rupees or 20 paise?
20 paise. Yeah. So before that, all the other apps like HDFC Bank, there was an app and stuff like that. So all those apps used to have percentage of the value of shares what you're purchasing or buying or selling. They used to take commission or brokerage on the percentage of that. Whereas here, what Zerodha did was they did flat charges, which was 20 paise per transaction, irrespective of it being a 1 rupee transaction or a 1 crore or 10 crores transaction.
Okay. So what happened when Zerodha entered in the market? And I will not bore you guys with what happened with brokerage and all of those things. You guys, some of you guys have your first class, so we're not going to get into that. But simple as that. Whenever I buy a share, whenever I sell a share, let's say for example, I'm using Zerodha as a platform. Or let's say for example, I'm using HDFC ka platform. So for buying that share, I have to pay a commission, I have to pay a brokerage charge. Whenever I buy a flat, whenever I go through a broker, can I say I have to pay 1%, 2% to that broker as his transaction fees, as his commission fees? Similarly, whenever I have to buy a stock, whenever I have to sell a stock, I have to pay a certain brokerage. And what did Zerodha do? Zerodha, whenever as soon as they entered into the market, they lowered these brokerages a lot. They lowered these brokerages. Now, what happened as a result of this? A lot of people came into the market because there is not a lot of brokerage now. The transaction cost. What is transaction cost? The cost to enter into the transaction of buying or cost to enter into the transaction of selling that stock. Right now, the costs have drastically reduced with what used to be 10 years ago, 12 years ago. And trust me, a lot of brokerage houses are fighting for survival, especially with their brokerage business. A very, very classic few examples you guys can check out. Let's say, for example, Motilal Oswal was struggling for a very long period of time. You should check that out. And a lot of traditional brokerage houses. बहुत सारे तो, a lot of them closed also, where the main business was earning this brokerage. So what happens? Sir, naturally, when the transaction cost, the cost to enter into the transaction goes down, a lot of people will come into the market now. Naturally. Right. Because the price to pay will be less. So a financial system ideally should have a lower transaction cost. Right. And where does that lower transaction cost come from? As more and more people are involved, as the liquidity grows. All of these are interlinked. We'll not get into the depth of that. Point being, there should be lower transaction cost. And you should study this, and which I think Karan properly pointed out, that earlier there used to be commission charges. Whatever is your transaction value, let's say, for example, I'm buying a stock worth 10,000 rupees. Let's say I'm selling a stock worth 10,000 rupees. So 1%, 2%, 3% of that 10,000 rupees I'll have to pay as brokerage, which is almost as good as 100 rupees. So if I have bought a stock, let's say for example for 9,900 rupees and I'm selling it for 10,000 rupees, sir, my profit is 100 rupees, but for this selling of 10,000 rupees, I have to pay a brokerage of 100 rupees. Are profit 100 rupees, brokerage cost 100 rupees. What is my net profit? Zero. What am I earning out of this transaction? Zero, sir. Not a lot of money. But what did Zerodha do as it entered into the transaction? It told you, sir, we are going to charge flat brokerage from you. 20 rupees per transaction, irrespective of the transaction value. Now the dynamics have changed a little, but this is what happened initially. Right now the charges have changed a little now. If you guys are involved, you guys would know. Right. Now, this is what liquidity is. This is what low transaction cost is. But before we move ahead, is everyone understanding everything? Is the speed fine? You want me to reduce the speed even further? As 15-20 minutes have happened, now I need an attention diversion. So yeah, that's fine. Is everyone understanding everything? Any doubts so far? I know वो थोड़ा supply demand वाला point थोड़ा सा वो होगा tricky, but hold it for some time. All right, perfect. Let's move it now then. Okay. Now information should be readily available. That is also very, very important. Guys, what happened with the advent of Geo? Okay, I'll reduce the speed, Akash. No worries. What happened with Geo? Data became very cheap. Earlier, we used to pay 300 rupees for 1 GB. And we used to, make sure that that 1 GB goes on for 10 days, 15 days, 20 days, 25 days. Data used to not be cheap. It used to, hotspot was like a luxury. If I ask my friend for a hotspot and he gives me, he's a very close friend of mine. That's how it used to work, right? But right now, with data being really cheap, what has happened? What do you guys think is the implication for financial markets? For users, okay. More demat openers, perfect. A lot of influencers have come in who don't even know a lot of things. That is something which I can go on about a lot. Where they're giving, now there are good rules now. Perfect. This is what I wanted to hear. Absolutely spot on, Tanvi. Access of information and knowledge of markets has increased. I have more access to information now, right? I can access to experts. They have their YouTube channels. I can go out and check how do I trade. There's so much information available. I can quickly go to the BSC website, check out what are the annual results. What is exactly happening with this particular company? What is the news that is floating in the market? With advent of social media as well, right now, there is so much knowledge available. In fact, the information is a little bit more now than what you need. There's over information. Let's be honest. Access to information on technical analysis. Everybody is coming out with their courses on technical analysis. Right? There's so much information, guys. So much. Can I say what happens with this? With this, everyone becomes an expert. Everybody wants to trade in the market. Everybody wants to come into the market. Irrespective of whatever their situation is, irrespective of whatever their savings is, irrespective of whatever their risk-taking capacity is. Just because some influencer on its 30-second reels told you that EV is going to be the next thing, so you should buy Tata Motors or some other stock, now you're going to go and buy that stock. That is what happens, right? A lot of people do that. They commit their mistake and then they come back and realize that, oh, this is not something that I should have done. In fact, for that matter, because of this, a lot of people have a bad interaction, their first interaction with the stock market. And when you have a first bad interaction with a lot of our parents' generation had that. In the 90s, with let's say, for example, with your Harshad Mehta scam or with your Satyam scam, what happened? Our parents who were getting into the stock market for the first time, probably, they had a bad first experience. And now most of them will tell you this very basic thing कि boss ये आपके लिए नहीं है, इसमें पैसा डूबता है. Now the thinking is changing. Eventually, now people are shifting from real estate to mutual fund and everything else because now the awareness is coming that it's a long-term game. Nothing against people who trade. But the point being, I have a problem with disinformation. That information should be readily available. That is a good sign of a stock market. Why should you know that Kashmir mein there is a particular reserve that has been found, which is a lithium reserve, which will be used for lithium ion batteries? Imagine this news if EV was 20 years ago, EV was going to be built, and this news would have broken out. It would have just come in newspapers. Probably some people would have had access to it, and some people would have used that to trade and make money out of it or invest in automobile companies. But now everywhere, on Instagram, on YouTube, on in different social, in basically everywhere you can find this information, and you can become more aware. And it's a good thing, right? So information should be readily available. Disinformation you should be wary of, right? And then there should be regulation to ensure the execution of contract. There should be regulations, right? SEBI should have certain rules. Now, what do you mean by execution of contract? Just hold this for some time. We will understand this again in derivatives when we learn about what derivative contracts are. So what points are we left with from this slide? Sir, we are left with something which is where did it go? Manage risk. This point we are left with. We are left with in the future. This point we are left with. We are left with ensures execution of contract. This point we are left with. Right. We will understand this point in greater detail when we discuss derivative contracts and also some a topic of risk management. Right. Now let us go to the new slide. I hope there are no doubts. If there are any doubts, you guys can go ahead and ask. Okay. Chalo, let's go ahead. How do you achieve this purpose of being an idealistic? I want to be a good financial system. How do I achieve that purpose? Sir, whatever we have done, now we are just trying to structure now. This slide is very, very easy. How do I achieve a purpose of being a good financial system? Sir, have different investment vehicles that are able to give choice to people to be able to invest their money, to save their money and invest their money. A financial system should have mutual funds. A financial system should have bonds. A financial system should have equity shares. A financial system should have REITs. Now, what are REITs? Real Estate Investment Trust. We'll understand that in some time. Or also in alternative investment, you guys will study. A financial system should have bonds with different durations. 5-year bond, 10-year bond. What is bond? Bond is debt of a company. The money that company borrows from public is bond. Like how you invest in equity share of a company. Exactly in a similar manner, you invest in bond of a company where the company is not giving you ownership. The company is giving you or borrowing money from you against that bond. So a good financial system should have different vehicles, different instruments to be able to give you a choice for you to be able to invest in that market. मेरे पास choice, I want a choice, right? I just don't want to invest in FD or savings bank. I want to be able to invest in stock market. I want to be able to invest in bond market. I want to be able to invest in derivative market. I want to be able to invest in commodity market. I want to be able to invest in alternative investment market, hedge fund, all of those things. A financial system should provide me all of this. It should enable me to borrow the money. We have understood that last time. A good financial system should promote borrowings. Tomorrow, if a particular company, which is, let's say, for example, uh, uh, let's say we're talking about Fortune 500 company, before they became Fortune 500 company, for expanding, they needed money, na? And every time I cannot come up with an equity capital issue. I want money, let's say, for example, I want 100 crore rupees. So I'll go to the public and issue them equity shares. Every time I cannot do that. Because the cost associated with raising money from public in the form of equity shares is huge. अरे पहले underwriter ढूंढो, hire some bank, go to SEBI, take 100 approvals, then from SEBI I will get the permission, then I will have to do certain audits, then CA will come in, it will do the audits, then I will go to a bank, then the bank will study, then the bank will ask 100 questions, then the bank will charge a certain fees, then I will go to the public, then my issue will come, I'll have to give out 100 advertisements, then I will do the listing. Arey yaar, so much to do in this. I cannot issue equity shares every time. If I have to expand, I will have to borrow money. And where do I borrow from? My financial system. Go to different banks, go to different NBFCs, go to different HNIs, borrow money from them, do a private placement, all of those things. That is what it is. A financial system should enable me to issue equity shares as well. It should enable me to equity shares as well, right? If there was no SEBI, if there was no, and we've discussed this, there was no SEBI, there was no RBI, there was no SEBI, there was no BSE, there was no NSE. If I wanted people to buy my shares, I would have to call 100,000, 200,000, 300,000 people. Right? Let's just take an example. If you guys are understanding that why a platform is needed, let me just take you guys to BSE quickly and let us just see how many shares HDFC Bank has. Let's just take a look at that. How many shares HDFC Bank has? And for simplicity, we assume that every one person will buy one share. We'll assume that. Imagine if there was no BSE, I would have had to call. Sorry, it's not in disclosures. Shareholding pattern. No, this is the number of shares that HDFC has. Imagine reaching out to every shareholder and telling them, can you please buy my share? Can you please buy my share? Can you please buy my share? It's very tedious, right? I need a financial system in place which enables that for me. हाँ, थोड़ा listing fees ले लो. Take a fees from me. हाँ, I have to comply with 100 regulatory requirements. Okay, do that. But imagine, that is why BSC is needed. That's why NSC is needed. So what is the, if we have, so let's just see who are the promoters currently. अच्छा, promoter stake तो उन्होंने completely dilute कर दिया. पूरा public, everyone is with, everything is with public. Public में which are the largest shareholders? There is ICICI, there is SBI Nifty 50. ETF है, there is ICICI Prudential, there is HDFC, there is UTI, there is Nippon. Okay. Okay. So this is the list. They have to give out patterns also. They have to give out the shareholdings, right? They have to give out who's holding how much. अरे वो गूगल पे पुराना इन्फॉर्मेशन आता है, ये रियल टाइम अपडेट होता है. आकाश, ये रियल टाइम अपडेट होता है. दिस हैपेंस ऑन रियल टाइम. यू हैव टू सबमिट दीज रिपोर्ट्स क्वार्टरली. ये क्वार्टर एंडिंग सितंबर 2024 का है. ठीक है. Now let us move ahead and let us talk about. Yeah, most likely वो नंबर गलत होगा. Now let us understand risk management. And now there's a very, very simple example that I want to discuss with you guys. Let's say, for example, I am TCS. What exactly TCS does, guys? Is anyone aware what TCS does?
The software solutions.
Absolutely. Software solutions. And what kind of softwares? I mean, okay, let's just not go there. Let us just understand it this way. Usually it exports its services. So TCS provides, let's say, for example, software solutions to a lot of clients back in the US. I hope you guys are aware, a majority of our export share comes from software export. Infosys, TCS, these people did very well for us. This has huge economic implications, balance of payment and all of those things in economics. I hope you guys have studied basic economics. If not, koi baat nahi. So it generally, usually what it does is export services. So it will provide software to, let's say, for example, an XYZ client in US and the client will pay dollars. Okay. So let's say, for example, today, I have supplied a particular software to an XYZ company in US, or let me just construct an example properly. So TCS has supplied software to an XYZ company in US. TCS is in India. Okay. This software, the payment for this software will be, let's say, for example, $1 million. $1 million. Now the client in the US will pay in dollars only. Na? Usually this is what the terms of the trade are. Export mein what happens? Whenever you export a commodity, whenever you export a service, whenever you export a good, usually they pay in their currency only. Right? Now as TCS, I am aware that 3 months later, I am going, now listen to this very carefully. 3 months later, I am going to receive $1 million. Can I say as TCS, my expenses, all of them are going to be in INR, that is rupees. तो मैं डॉलर का क्या करूंगा? I'll have to convert that dollar into rupees ना. I have to pay my employee's salary, I have to run the administration cost, I have to do so much. All of that will happen in rupees. So I have to convert this $1 million in rupees. So as a TCS, I am going to receive $1 million 3 months later. What is my risk? What is my risk, guys?
The dollar depreciating.
Dollar depreciating. Okay. Currency value is my risk. Okay. Okay. Currency value, I get it. Okay. Currently, the INR USD rate is, let's say, rupees 60. At today, T equal to 0. What is my risk as TCS? After 3 months, at T equal to 3, that is after 3 months, whenever I say T equal to, I mean time. Whenever I say at T equal to 3, let's say, for example, the INR USD rate is 65, the INR USD rate is 55. We are talking about two scenarios. Scenario number 1, scenario number 2. What do you guys think? What is the risk? 65 rupees or 55 rupees? Dollar going to 65 rupees is my risk, or dollar going to 55 rupees is my risk? What is my risk? Come on, guys. What is my risk?
55.
Dollar going to 65 or dollar going to 55? Okay. For somebody who's saying 65, can you justify that to me? जो भी 65 बोल रहा है, can somebody please justify that to me? और 55 वाले का भी रीजन सुनेंगे. पहले 65 वाले का सुनते हैं. Anyone? Dollar going to 65, why is that a risk? We will get less value. अरे कैसे यार? How are you going to get less value? How much is $1 million, guys? 10 lakh dollars? Currently, when I convert this 10 lakh dollars into rupees, if I were to get, अगर आज मुझे मिल जाता, जो नहीं मिल रहा है, but मैं simplicity के लिए बोल रहा हूँ, if I were to convert this today, how much would I have gotten? 60 lakh rupees, sir. Tomorrow, if the dollar goes to 65, how much will I get? अरे sir, 65 lakh rupees. So how is this a problematic scenario for me? I am getting more rupees. Problematic scenario for me is tomorrow the rupee depreciating. Sorry, the rupee appreciating. अब rupee appreciating, depreciating में confuse होगा, hold that. But rupee going to 55 rupees. Because I will get only 55 lakh rupees when I convert my $1 million. This is problematic for me. I am getting lesser rupees. For people who answered 65, is this clear? जिन्होंने भी 65 बोला था, is this clear? This is called as rupee appreciating. This is called as rupee appreciating. This is called as rupee depreciating. $1. Sorry, let me just explain it this way. I could buy $1. I could buy $1 using 60 rupees. Now that $1 has gotten a little expensive and I'll have to spend 65 rupees for that $1. That means rupee has depreciated in its value. I'll have to spend more rupees to buy $1. Right now, I'm trying to explain what do you mean by appreciating or depreciating. Do not get confused with what I've explained before this about 55 and 50 lakhs, 60 lakhs. Do not get mixed up with that. For if it goes to rupees 55, that means rupee has appreciated. Why? Because now I'll have to spend fewer rupees to buy that $1. Right? So for me as TCS, sir, what is the issue? Sir, the issue is rupee appreciating. Why is that an issue, sir? Because I will be able to get, I will get lesser rupees for that 10 million or sorry, for that $1 million. Right. That is what they're trying to explain. That is what we're trying to understand. So this is my risk, guys. This is my risk. And can I say I am aware of this risk? I am aware of this risk at t equal to 0 itself. Does everyone agree with this? I am aware of this risk at t equal to 0. थोड़ा मैंने अच्छा मैंने एक सेकंड मैंने 6 करोड़ की जगह पे 60 lakhs लिख दिया वो सॉरी माय बैड बट आई होप यू गाइस अंडरस्टैंड द मैथ माय बैड मेरे को वो 1 लाख लिखना चाहिए था मैंने 1 million लिख दिया माय बैड बट आई होप यू आर अंडरस्टैंडिंग यथार्थ इज दिस क्लियर वो मतलब instead of 60 lakhs we'll consider 6 crores instead of 6.65 lakhs we'll say 6.5 crores instead of 55 lakhs we'll say 5.5 crores but I hope you understood. I'll repeat यथार्थ क्लियर है यश I'll repeat ठीक है यश can you unmute क्लियर है ठीक okay so this is my risk how do I manage this risk I am aware of this risk at t equal to 0 only now my financial system should help me manage this risk now my financial system should help me manage this risk right how do I manage this risk that hold it for some time but I hope you guys have understood the problem statement and I am aware of this problem at t equal to 0 when I have sold my software services to XYZ company in the US. And financial system should offer me a solution for this. Right. Now, how do I manage this risk? How do I manage this risk? We will understand it here in derivative contracts. Right. So hold it for some time. But I hope the problem statement is clear. Right. Everyone clear with this? This is a bit confusing. This generally gets a bit confusing for a lot of people. But is this clear, guys? Okay. So we're done with savings as a point. We are done with borrowings as a point. We're done with issuing equity. We are done with risk management. We have not understood how, but we have understood what is the risk. This is yet to be addressed. Exchanging asset. Again, hold it for some time. we'll understand this is in derivatives part. Right. So hold this for some time. Okay. A financial system should be able should give me a platform to utilize the information that I have. Sir, what do you mean by that? What does that mean? Let's say, for example, I was able to analyze and study. How do I explain this? Okay. Let's just say environment as a trend or ESG. Let's just take it as ESG. It's much better because थोड़ा holistic approach हो जाएगा. Are you guys aware of what ESG is? Anyone? What is ESG? Environmental, social, and governance as a metric. In today's day and age, companies are becoming more sensitive towards environment. Companies are becoming more sensitive towards social policies. What does that mean? Having a good labor, employee policy. If I'm a manufacturing company, so I should have good labor laws. I should pay them salary timely. I should not exploit them. I should have good 8 hours working, not more than that. I should make sure that they get good conditions to work. All of those things. So I should be socially a sound company. Because if this is not the case, tomorrow somebody can file a lawsuit on my company and I can have a huge litigation cost. Let's say, for example, my labor condition is not at all good. I'm exploiting them. I'm making them work for 14 hours. I don't have good working conditions for them. In fact, in some cases, my labor has been, there has been violence against my labor, where my supervisor has hit my labor. Can I say I'm looking at a potential litigation? So as a company, if I want to invest in a company, I will look at the fact that whether this company is socially sound or not, whether their social policies are right or not. Because if they're not, this company is expecting a huge litigation and it can ruin its existence because of that litigation. And this has happened in the past. It is for a lot of other companies as well. Then there is your governance. As a company, I should have internal checks. I should make sure my employees are working in the favor of the company. The employees are not stealing the money. There is accountability. There is a proper manager, then there is a supervisor, then there is your whatever the hierarchy is generally, and then so on and so forth. So these things are there. So now where am I getting at? What am I getting at? We were starting with utilizing information as a point, but where am I getting at with this? Environment is going to grow as a concern is going to be huge in the next 15 years, 20 years. Whoever is going to try to solve the climate problem, whoever is going to solve the climate issue is going to earn a lot of money in the future. Because it's going to be a huge offer. Basically, this is going to be a huge concern. Because right now, there's not a lot of impact. But in the next 20, 25 years, the impact is going to be very, very visible. Very visible. Trust me. Let's say, for example, North India currently, Delhi is facing a huge problem because of their because of the air and the AQI levels and stuff like that. And what is the primary reason for that? Can somebody tell me what is the primary reason for the pollution in Delhi? It's still huge. It is not very visible, Akhilesh. It's stubble burning. Absolutely true. It's stubble burning. Industries and smog. You guys are right, but the major reason is stubble burning. What is stubble? Basically crop burning from Punjab and Haryana and those parts. So whichever company is going to try and solve this issue is going to earn really well, right? Whoever has a technology or patent or anything of that sort. Let's say, for example, as an investor, I'm able to identify this early trend. I'm able to understand, and let's just take an example, which is a very, very relevant example for you guys. I hope I was able to explain that environment, why it is becoming a very, very important concern. Now, let's say, for example, we guys are aware that automobile run on petrol and stuff like that, which is not basically it is going to exhaust in the future and not a good source of fuel because, of course, the emissions and everything else are also concerned with that. So not a very clean source of fuel. So the industry in general is moving towards EV is moving towards ethanol, is moving towards, all of these different hydrogen fuel and all of these solutions. As an investor, I'm able to understand a particular company's movement. Let's say, for example, Amara Raja Batteries. It's a huge battery company. As an investor, I was able to understand and read. By understanding and reading its financials and reading its strategies, I was able to identify that this company is making a move towards producing batteries for electronic vehicles, the lithium ion batteries. It is pooling money. It is, for establishing a manufacturing unit, for EVs, and it is making a significant progress in that direction. It has a huge R&D that is going on, and all of those things are there, and I'm able to identify all of that as an investor. But the current stock price of that particular company, which is Amara Raja Batteries, is not justified to the kind of moves that company is making. So ideally, as per the movement that company is making towards electronic vehicles battery production, the R&D that company is spending on, the company is also, the capex that it is doing to establish a manufacturing unit and all of those things, I feel.
Sir got dropped.
Hi guys, sorry, there was some issue and I got exited out of the meeting for some reason. Anyway, let's continue. So I'm able to identify this early trend. When I'm reading and when I'm understanding the reports and everything else, I'm able to identify this trend that Amara Raja Batteries is going to have a huge facility to produce the EV batteries, to be able to and to have good EV batteries. They're also spending on R&D. So I feel excited also. Perfect. मैंने हमारा राजा का लिया. You can also take an example there. So I feel this is going to happen. And currently, the share that Amara Raja Battery is, the price that Amara Raja Battery is trading at, it is not justified. I feel that the market price should be 500, but currently the price is only 300. Can I say that particular stock is undervalued? That stock should be more than what it is currently trading at, as per my estimates. It is an estimate, it is not a sure shot. But I feel that because the progress that the company has made, and tomorrow when the industry shift happens and people are starting and looking for battery manufacturers for electronic vehicles, other companies which will start and make their move, Amara Raja Batteries would already have a unit, would already have a technology, would already have research and development and everything else ready for them to be able to make a move and produce thousands of battery in one go. So they're going to benefit a lot out of this. But people are not trying to, or people are not understanding this fact today. What do I do? As a trader, what do I do? I will buy this stock because tomorrow from 300 it will go to 500. That is a good return for me. The stock is undervalued. But what if the financial system doesn't give me a platform to utilize this information? What if Amara Raja Batteries stock could never trade because there was no BSC, there was no NSC, there was none of that. Or Amara Raja Batteries stock is available, but the transaction cost is huge. There's a huge brokerage that is involved. What do I do? Will I be okay with buying that stock? No, sir. Okay, it is undervalued, but the transaction cost is huge. Who will go through that hassle? So much to pay for transaction cost. What do I do? I have no clue. I'll have to check, Akash. I don't remember the numbers ऐसे just like that. What do I do? Arey sir, there is no platform. Arey sir, there is a platform, but the liquidity cost is huge. The transaction cost is huge. Nobody is ready to sell me. This is what the issue is with with a bad financial system. If the financial system is good, you will be able to buy Amara Raja batteries. You will be able to utilize the information that you have, the analysis that you have reached. And that is how people make money in the long term, right? They take blind bets, and not blind bets. It's a well researched bet, but it's a shot in the dark at the end of the day. Yes, it is. उन्होंने बदल दिया ना. Used to be Amara Raja Batteries. हाँ, मैंने तो एग्जाम्पल दिया भाई. वो एग्जैक्ट प्राइस कोट करना थोड़ा मुश्किल है. Right, guys? So it should enable me to utilize that information. That is what the underlying thing is. So utilize the information. Undervalued stocks. Now, sir, why have you returned your overvalued stocks? Today, the stock price is 500. As per my analysis, ideally the stock price of this company should be 300 rupees. Let's take an opposite example. Amara Raja Batteries has not made any move to produce EV batteries. They have not either set up a research and development, they have not set up a manufacturing, or they're not, pooling money for to be able to set up a manufacturing unit. They have not made any progress. Tomorrow Ola will come, tomorrow Ather will come, tomorrow all these companies are going to come. They're going to set up their own manufacturing units for batteries, and Amara Raja is going to go out of business. People are only looking at what Amara Raja battery is doing currently today in business. It is doing well, but what about the future? People are not trying to discount that. And because of that, currently the stock price is 500, but ideally I feel the stock price should be 300, because in the future, Amara Raja battery will suffer. What do I do with this? How do I profit from this information? How do I profit from this information? Can somebody tell me? Absolutely spot on. I will short sell. Sir, what do you mean by short sell? What is short selling? Now, I will talk about a very, very theoretical example of short selling. Short selling has evolved a lot, but the theoretical example that I'm going to discuss with you guys is relevant for you guys because it has been used in your text. If you read your Schwezer, if you read your curriculum, everywhere, this example of short selling, which currently is not very popular, but this is what generally they mean by short selling. There's another form of short selling for people who understand derivatives. For you don't, for guys who do not, it's okay, it's fine. But there's another aspect where you go short in the market, you go short in the futures contract, you go short in forwards contract, you take certain position in options. So that is how it is. But here, what we're talking about is a little more delivery based, which has been generally used for you guys in your curriculum. So what I'm going to tell you guys right now, understand that is what you mean by short selling, right? For people who would get confused, जिसको कुछ भी नहीं आता, मैंने अभी कुछ नहीं बोला. For people who do not understand anything, I have not said a word. You guys have to understand short selling the way I tell you guys. For people who are already aware of a few things but are not completely aware, they might get confused. Arey sir, I've studied something else there. I've studied something else there. Relax. What I'm telling you, understand that. Perfect. All right. Guys, problem statement understood? 500 is what the price is. 300 rupees is what I feel should the price be. How do I profit from this situation? Is the problem statement understood, guys? All right. Okay. Now I am a long-term investor. There is a broker. There is an investor investor basically, I mean, who's the owner of Amara Raja Battery. Owner as in who owns the stock. Huh? He has, let's say, for example, 1,000 shares of Amara Raja Batteries. An investor whose owner, basically, who owns the, I'll just, itna time pass kyun karna hai yaar? owns 1,000 shares of Amara Raja Batteries. Let's just call this investor Mr. X. Now he is a long-term investor. He does not care about these short-term movements. He thinks that company has good scope in the future. 10, 15 years, my vision is that much. I'm going to hold this stock. I'm going to sit on this stock for 10, 15 years. I've bought this stock. I know that the management is good, the company is good, the fundamentals are good, cash flow is there, sab badhiya hai. I want to invest in this company for the next 10, 15 years. Now there is another person, Mr. Y, who has made all of this analysis, who thinks that currently the price in the market, which is 500, is overvalued. He thinks that the stock market price should be 300. Because tomorrow in the future, as the news breaks out that Amara Raja Batteries has not made any significant move in EV, the price will fall down. So he feels that in the short term, the price will fall down from 500 to 300. This is a short-term phenomenon, by the way. Tomorrow, when Amara Raja Batteries, since because it is a huge company, it has got a huge, customer base, has got huge manufacturing facilities, has years of experience, has a good technology team. So tomorrow, if it has not made any move, it will catch up for all of this lost time, by the way. Bajaj did not launch a lot of EV scooters for a very long time. Bajaj did not make a move. Ola came in, Ather came in, so many people were launching. फिर लाया ना वो चेतक. चेतक उनका ही ना, if I'm not wrong. They came up with that na. Because the company was already established, they could launch faster. तो ऐसा नहीं है कि मैंने move नहीं किया तो I have a long-term problem. That is not. It's a short-term problem. The company has not made a move. It is not a good news. But tomorrow it will. So do not assume this as a long-term problem. It's a short-term problem. That company has not made a move. Tomorrow the price will go from 500 to 300. Right. Guys, please correct me. Chetak Bajaj ka hi na? The EV that they've launched? अरे क्या बात है. Perfect. All right. Okay. Perfect. So as Mr. Y, how do I profit from this? Sir, I have to enter into a transaction which is called as short sell. Sir, what does that mean? Broker will go to Mr. X. Broker will tell him, Mr. X, listen, anyway, the shares are lying in your demat account. You have a 10, 15 years vision for the company. I'm giving you an opportunity to earn a short-term fees. Now listen to the story carefully. Yeah? Listen to the story carefully. Everything will connect in the end. Just understand the facts for now. Broker goes to Mr. X, tells him, listen, you have a 10, 15 year vision. Anyway, you're going to hold that stock for 10, 15 years. It is lying idle in a demat account. So now, why don't you, I'm giving you an opportunity to earn a particular fees. Mr. X says, how? Broker says, you lend me the 1,000 shares of Amara Raja battery that you have. Broker says, okay, I will lend you the shares. So what broker does is, broker lends the share to what Mr. X does is, Mr. X lends the shares to broker. So it has lent 1,000 shares to the broker. And broker will in turn pay a particular fees to Mr. X. Now, if Mr. X has lent the shares, ultimately, broker has to return this 1,000 shares to Mr. X. Now, when I've lent something, whenever I lend money, I have to return, I get that money back. Similarly, I've lent shares, so I will get those shares back. So this is your one leg of the transaction, where Mr. X has essentially lent his shares to the broker. In the return for that lending, it is going to get a fees. And eventually in the future, whatever the duration of the contract is, whatever the duration of the lending is, it is going to get back those shares from broker. This is what the first leg of the transaction is. Clear, guys? Everyone clear? Understood? So far, I've not explained anything. Everything will fall in place in the end. But I'm trying to understand, make you guys understand the facts right now. That's it. Okay. Now, Mr. Y goes to the broker and tells him, listen, you have borrowed those 1,000 shares now, lend it to me. Broker says, okay. So what Mr. Y does is, it borrows the shares from those broker, from the broker, the 1,000 shares from the broker. And what Mr. Y does is, it sells it in the market. So what did I do? As Mr. Y, I went to the broker. I told him, listen, you bought those 1,000, you borrowed those 1,000 shares and lend it to me. You lend it to me. So I have essentially borrowed those 1,000 shares from broker and I will short sell in the market. Sir, what do you mean by short sell? Short sell is selling the shares which you are not the owner of. You are not the owner of short sell, the shares of Amara Raja Batteries that you are going to sell in the market. That is what short sell as a transaction is. Okay, sir, then you have short sold the shares in the market. How much are you going to get? You have sold 1,000 shares, which you have borrowed from the broker for 500 rupees. And how much you have sold it for? Sir, you are going to get 50,000 in your pocket. So imagine this is the pocket of Mr. Y, the ultimate borrower. Why do I say ultimate borrower? Arey, Mr. X, the broker borrowed the shares from Mr. X, and ultimately Mr. Y borrowed the shares from broker. So broker is like a mediator. Broker is not the ultimate borrower. The ultimate borrower is Y. Broker is just a mediator who has borrowed shares from Mr. X and lent it to Mr. Y. So ultimate borrower is Mr. Y. So the wallet of Mr. Y, how much? How would it look like right now? Sir, it would have 50,000 rupees as addition or as inflow in his account. When I write inflow, I am writing here as plus sign. I am explaining this transaction in greater detail so that there is no problem in any subject with short selling. Then you guys would be able to understand this very well. Now, can I say, let's say, for example, the duration of this transaction is 3 months. As Mr. Y, who is the short seller, he feels that the price from 500 will go to 300 in the next 3 months, as per his analysis. As soon as 3 months happen, which is the duration of the contract, which is the duration of the borrowing, what will happen? Sir, Mr. Y will have to return the shares to broker, which it has borrowed from the broker, and broker will ultimately have to return these 1,000 shares to the owner, Mr. X. तो यहां से ले लिया वापस दे दिया ओनर को. Right. That is what they will have to do. That is what will happen at the end of the contract. That means what will happen? Mr. Y will go in the market, will buy 1,000 shares of Amara Raja Batteries at the current market price. If it goes right, as per his analysis, sir, the price should have gone to 300. Let us assume the price goes to 300. So he will do what? Sir, he will go and buy 1,000 shares from the market and return it to the broker. So what happens? From his wallet, he will have to spend 30,000 rupees. It will have to buy 1,000 shares for rupees 300. It will have to spend 30,000 rupees. Sir, what is left in the overall wallet? Sir, 20,000 net. That is the profit for Mr. Y. Mr. Y, without owning the shares, was able to borrow the shares for 1,000 shares and sell it in the market and earn 50,000 rupees and keep it in his pocket. Tomorrow, when the price goes down, it was able to buy back that particular shares that it had borrowed to return the shares for rupees 300 per share by spending 30,000. Ultimately, 20,000 rupees will be net left in his pocket. For this transaction, it will have to pay a certain fees. Let's say, for example, Mr. Y pays a certain fees to the broker for entering into the transaction, let's say 500 rupees. Broker pays Mr. X, let's say 400 rupees, and keep the remaining 100 rupees, the spread of fees with itself, which is brokerage. So for a short seller, what is the net profit ultimately? Sir, 20,000 rupees on the transaction, but it had to pay 500 rupees as fees. Then ultimate profit is 19,500. All of this only when my estimation is right. Guys, is the transaction understood? क्या सबको समझ में आ रहा है? थोड़ा खिचड़ी हो गया है यहाँ पे, but I hope you guys are able to understand this transaction. Guys, understood the transaction? We went very, very slow. If any doubts, please ask me. I hope you guys have listened to this very carefully because this required like 100% attention for you guys. डिपेंड करता है ब्रोकर टू ब्रोकर देव. वो डिपेंड करता है ट्रांजैक्शन मार्केट में क्या चल रहा है, हाउ इट वर्क्स आउट, and depend from stock to stock. Dave, let's say for example, I'm talking about, are you aware that large cap stocks are more liquid and small cap stocks are less liquid? Do you agree with this, Dave? Okay. Can I say for the stocks that are less liquid, there will be a difficulty to borrow? Do you agree with this? As the difficulty will go up, tell me the brokerage fees will go up or go down? Absolutely. So can I say the factor that decides the fees, which is none of our concern, we don't have to study this, but one of the factors is liquidity of the underlying stock, which you are borrowing and selling ultimately. Right. Perfect. Okay. Guys, understood? Yes or no? 50 लोग हैं यार, मेरे को 4-5 लोग हाँ या ना बोल रहे हैं यार. Come on, guys. Did you guys get it? Yes or no? Preeti.
Sir, is this short selling allowed in India?
What?
This short selling allowed in India? Not for the derivatives, for stock short selling.
It is. But
It
you
is?
don't literally borrow the stocks. You can do it in intraday,
Okay.
but you have to have certain margins, and then there are, 10%, 15% of the transaction. That is what happened in derivatives. The terms are different. It depends upon the kind of position also you create. Let's say, for example, you have created a hedge position where you've got long and short in a similar sort of a security. Then you might need a little less margin. So it depends on the way that you can negotiate and the status also that you have, whether you are a retail client, HNI client, institutional client. So there are a lot of factors that are there for this, but you can do it in an intraday setup. You don't literally borrow the shares in the current context. हाँ नहीं लेता अकेले सही बोला मैंने बोला अभी जस्ट मैंने ये बोला दैट इज व्हाट आई सेड राइट नाउ अरे पैसा तो देना पड़ेगा ना भाई बोरो किया पैसा निखिल whenever I take a loan can I say I pay a certain loan processing fees whenever I take a home loan I have to pay a certain loan processing fees why do I pay that मैं क्यों पे करूंगा मैं तो होम लोन लिया डिबेटेबल पॉइंट exactly like that I have to pay अरे for me to be able to borrow for me to get that service from the broker the service of what the service of borrowing the stock for that service I'll have to pay a fees ना क्योंकि ब्रोकर को भी तो आगे मिस्टर एक्स को देनी है फीस उसने प्रॉमिस किया है ना उससे वो बोरो करके लाया था इट हैड प्रॉमिस हिम दैट लिसन आई एम गोइंग टू रिटर्न यू द स्टॉक आई एम गोइंग टू पे यू अ सर्टेन फीस फॉर दिस यू गोइंग टू अर्न मनी आउट ऑफ इट so it has to pay some money now so it will pay certain fees to it where is he going to get that fees he's not going to pay it from his own pocket he's going to take from Mr. Y and then it is going to keep that spread that differential amount with himself right
My question
but
is
guys
when
हाँ,
we are borrowing first, then Mr. Y will also pay the fees, and after he has gained the profit, then he will also give some commission out of it.
commission generally no it don't depends upon the transaction usually ये transaction होता नहीं real life में this used to happen not anymore so what happens usually right now is you have to pay a certain margin and it's an intraday setup where you actually not are not taking a delivery you are taking a position it is not like a derivative market position but an intraday position where you have committed a certain amount of buying and selling but anyway commission नहीं होता ये समझ लो easy simplicity के लिए अपन ऐसे समझते okay guys what is the issue what is the risk here what is the risk here what if the price goes from 300 500 tomorrow to 600 rupees sir this is a problem this is a problem at the end of 3 months when the price goes to 600 I still have to return the stock na I'll still have to return the stock मिस्टर एक्स थोड़ी ना बोलेगा अरे अरे प्राइस बढ़ गया तो नहीं नहीं कोई बात नहीं यू हैव सफर्ड अ लॉस इट देयर इज नो नीड टू रिटर्न द स्टॉक आई अंडरस्टैंड योर पोजीशन अरे नो आई हैव टू रिटर्न द स्टॉक that means what does that mean I'll have to buy the stock from the market at an expensive price than what I short sold at अरे मैंने शॉर्ट सेल करके कितना कमाया था how much did I earn when I short sold sir 50,000 rupees how much I have to rebuy it at sir you'll have to buy 1,000 shares for 600 that means you'll have to spend 60,000 that means it's a straight up loss of how much sir 10,000 rupees is your loss sir what if the price goes to 700 sir what will be your loss 20,000 rupees sir what if the price goes to 800 what will be your loss 30,000 rupees sir what if the price goes to 900 what will be your loss 400 what will be your loss then whatever the math is 40,000 rupees can I say it's a very risky transaction? Because the stock price will fall. It can maximum go to 0. From 500, the stock price, let's say for example, tomorrow theoretically goes to 0 rupees. If I were to talk, चलो इसको थोड़ा ये board थोड़ा गंदा हो गया. Let me just take the example here. Tomorrow, the stock price from 500 goes to rupees 0. That means I was able to short sell in the market for 50,000 rupees, and at t equal to 0, this came in my wallet. At t equal to 3, after 3 months, I'll have to buy the stock from the market. That is 1,000 shares I have to buy from the market at 0 rupees. That means I have to spend 0 rupees to buy 1,000 shares from the market. Practically, I'm going to get those shares for free in the market. That means I'll have to spend how much, sir? Sir, rupees 0. That means what is your total profit? Sir, do not consider fees right now. Ignore fees. Fees is a flat fees that you have to pay 500, 600 rupees. That will be, of course, a determinant in your profit, but we're trying to understand gross profit. What is your overall profit, not a net profit. So 50,000 rupees will be your overall profit. This is the maximum that you can gain because the price cannot go in negative. The price cannot go in minus 200, minus 100. And this is also theoretically the maximum you can get. The stock price will not go to 0. But when I reverse the scenario, tomorrow if the price goes to, sir, if the price goes to, after 3 months, the price goes to 700. That means today at t equal to 0, I will short sell. I will get 50,000 at t equal to 3. Sir, how much do I have to buy it at? Sir, I have to buy 1,000 shares at 70,000 rupees. That means I'll have to spend 70,000 rupees. That means my loss will be 20,000. The stock price can go to 800. My loss will be, sir, 30,000. Stock price can go to 900. My loss will be, sir, 40,000. So there is no cap. There is no limit as to how much the stock price can increase. That means your loss can potentially be unlimited. Now, when I say unlimited, I don't literally mean unlimited, any amount, but it can be a huge amount. And it's a very risky transaction for this very reason, right? So whenever I say short selling as a position, when do I earn money? Can somebody tell me in short selling position, when do I earn money? When the stock price in the future goes up or when the stock price in the future goes down? चलो बताओ फटाफट. Goes down, absolutely spot on, guys. When do I lose money in the stock market? When the stock price goes up or when the stock price goes down? So naturally, when the stock price goes up. So the crux of the transaction is whenever I'm entering into a short selling position, whenever I'm entering into a short position in general, when the stock price goes down, I will gain. When the stock price goes up, I will lose. Simple as that. When the estimates are right, absolutely spot on. Right? Understood. So this marks overvalued assets as well. So we've understood. Now we've understood the entire transaction of short selling. Imagine this service is not available in my country. My financial system does not have a service of short selling. Broker does not allow me to borrow. Nobody is willing me to lend the shares. How do I profit from this information that currently the stock price is overvalued? There is no way I can. I hope you guys understand this. So financial system should be able to give me an opportunity to be able to short the overvalued assets. And what are equilibrium interest rates? Sir, equilibrium interest rates are the rate where the amount of investment in the financial system is equal to the amount of borrowing. That is, demand is equal to supply, as we have studied on the previous slide. Yeah, you can do that. That's what you do generally. That is what you do, Nishi. You have to make sure that you hedge your position very well. It's a very, very risky position that currently you've taken. So you have to go long in certain stock, or you have to make sure that you buy a similar sort of a stock that has a good correlation, or you enter into a derivative position and all of those things. You try and manage your risk that way because this is a naked position if you can understand it in that manner. So yeah, you try and deal with options as well. Usually nobody prefers that in intraday setup because the margins are also huge and it's an extremely risky transaction. So you go to options, you prefer derivatives basically. Sir, but in the case of small cap stock, is it difficult to short sell because the size of the company is small? नहीं, size of the company is small, I get it. But small cap stock के share number of shares भी तो कम होंगे ना market में. Do you agree with this, Dev? Small cap stock के shares भी market में कम होंगे नहीं? चलो, let me just take an example. Does anyone know? अच्छा, give me an example of small. हाँ, वो depends on the stock also. Generally बात करो. Depends on the liquidity. I get it, but I'm talking a little more general terms. Any example of a small cap stock, guys? Anyone aware? Any example you want to give? Chalo, let me just take. I don't know if it is still one of my favorite stocks, which I was really interested in for a very long time. I don't know how they are doing right now because I am completely. Oh, trading is suspended. Nice. This is what happens with small cap stock, guys. A lot of time trading is suspended for those stocks. Okay. Arcom. चलो ठीक है. एक और यार. Okay, ठीक है. Let me just second. Just a minute, guys. It's loading. I used to track this company a lot. I know where I'm trying to tell you guys to buy or not. I'm not an expert. I don't give advisory. But I used to follow this stock a lot called Snowman Logistics. And for some reason, this did not do pretty well. But if you look at the number of shares that are there, as opposed to HDFC Bank shares that we saw, I hope you can understand the very clear difference, Dave. कितने नंबर ऑफ शेयर्स है? कम है काफी? कहने से मार्केट में अवेलेबिलिटी कम होगी. अब देख इसमें प्रमोटर के पास कितना है. कहने से प्रमोटर का स्टेक इज नॉट लिक्विड, देव. Whatever stake promoter has, generally it is not liquid. The stake that is available in public is liquid. It is available in the market. That is why you called it as the floating capital. Are you there, Dave? Okay, I hope I was able to explain. If not, we'll try to discuss it again. कोई बात नहीं, अपन डिस्कस करते हैं इसको डिटेल में. We'll try to discuss it. ठीक है, so that is what this slide had to offer for you guys. And now let us go back to the slide that we had left off a few points from. Now, can I say a financial system should enable me to manage risks? This point would be clear. It should provide a security. It should provide an instrument for me to be able to manage the risk. What was that risk, sir? The risk was the currency risk that I was facing. And mind you, we have not yet discussed the security. We have not yet discussed the security or the instrument that helps you manage that risk. We have understood what was the risk was, and we need to manage that risk. How are we going to manage that risk? We have not yet discussed that. But I hope the first slide is clear now that a financial system should enable you to manage that risk. What was that risk? Sir, currency risk that I was facing, right? I need to manage that risk. Financial system should provide me an instrument to manage that risk. What will that instrument be? We'll discuss that, right? There it was. Now, the point that is left is in the future, right? Perfect. Guys, is the slide clear? Any doubts? We'll move ahead now. Go to the next slide. अरे यार अभी से बोर हो रहा है. Class is still 4. Yeah, it is still 4. Sorry. But now there are only 3 minutes left. I know that we cannot cover. I get it, of course. You guys have another class. I know I cannot cover anything more from now on. So we'll stop for the day. Usually first class is very slow. I want you guys to get hang of things. Tomorrow we'll try to be a little more faster. We'll try to make sure that we cover concepts a little more in detail as well, but we'll try to match the timing as well. But the first class, I want to make you guys used to the pace and used to the terms that we use, the teaching style that I have. I would really appreciate if there are any feedbacks that you guys have for me. If you guys want me to improve in any manner, if the speed is there, if the English, the Hindi part was not used a lot, which I did not today, because I saw a few students were from Bangalore as well. So I'm not generalizing, but there are chances that they might not understand Hindi that well. So yeah. So anyway, if you guys have any general feedback for me, please be feel free uh to give it to me. I will try to improve with the next lecture. Thank you so much for joining in for today. I hope you guys enjoyed the lecture and ओपिनियन में रिकॉर्डिंग बंद करने के बाद दूंगा. Anyway, so okay. So I'll just stop the recording for the day then. Thank you so much for joining in. Bye guys. This is for the recording, guys, and then